All right, ladies and gentlemen, we are back with our end of day report for trading on Monday, May the 1st. That's right, this is a new month. So let's see what the market is up to. So today was a little interesting. Hold on, give me a second. I need to check something right quick. I think there was something that I forgot to check. So let me do that right quick. And we'll get right into it. Running a little late again. Let's see here. All right, I gotta find out where I put something. So just give me a second. Bear with me. All right, let's see. Because there's something I want to show you, and I gotta make sure that everything is okay. I found it. All right, I found my issue. Hold on. I'm gonna have to reopen all my charts. Just give me a second. Bear with me. All right, so that's that. All right. Okay, we got that. Just got to check a few things. Just bear with me. I forgot to do it. I hit the go live button, and then after I did it, I remembered that I forgot to check on something important. So just hold on. Just give me a second, and then we'll have this knocked out. All right. I think I found what I was looking for. Just hold on. Hold on. Let's see. Got to find where I put something. And I think I got it. All right. All right. This should help our chart segment go a little smoother, if I'm correct. So just bear with me just for a moment. All right. Let's see here. All right, one more thing. All right, I think I am ready now. Yep. All right. All right, I just need to check my charts now, and then I'll know what's going on here. Just bear with me 1 second. All right, I think we're good to go now. So let me just go ahead and update. Got to refresh my charts and we'll be good to go here. Sorry. Next time before I hit the live button, I have to remember to fix everything, because if the data does not show correctly, then even though I know what I'm saying, you won't be able to see what I'm saying. And I need to be able to show you what I'm talking about. All right. Now, while I'm finishing up here, as you know, this is the FOMC week, and it's a pretty important one because it's going to set the course for the rest of the year and what we can expect coming out of the Fed. Right now, the market's pricing in a 25 basis point. And what I'm thinking is that what the Fed says is going to be way more important than even what they do. So, provided they don't, surprise or something like that. All right, here we go. First chart that we're going to go over is the Bitcoin futures. All right. So here is the Bitcoin futures. And as you can see here, the market is now in a bear market. We had a bear market rally. Then we had a bearish pointer. So the market was locked in on this bearish position. Now we have a neutralized bar. And the market proceeded to pull back. All right. So we're not surprised because we're in a bearish environment with a bearish trend momentum reading that is now a neutralized setting. And we got the back-to-back rally alerts, the market rallied. Then we got the back-to-back crash alerts, the market pulled back down, which is what we expect in a neutralized market. I mean, you can still trade neutralized markets, but it's going to be a lot of more chop and swing. And if you're okay with it, then you can do it. But if not, then it's better to set it out. So I'm expecting that maybe another day or two, and this thing will come off of neutralized, and then we'll see what the true direction the market wants to take. There's a good chance that at the 25,000 level, which is the top of the Kumo cloud, that is where the bulls will come in and try to defend and push the market back up. So that's what we're waiting on to see. All right. Next up is silver. All right. So silver is in a bull market with a bearish trend momentum reading. So we know that this market is in the sell the rally mode. All right. Now, it's funny because what silver did today is it rallied and then it crashed into the close and took out the overnight lows and gave us a bullish pointer also. Very, very choppy, very wild movement is what you're seeing here right now. So you're in the sell the rally mode. Is this market trying to relock in on the bullish perspective? It's possible. When the long-term trend is bullish, you expect that when you have a bearish trend momentum reading, that once that is exhausted, the market will give way to being ready to rally. So that's what we're going to watch for. We're going to watch and see if the market wants to try to rally from here. So you're still in the sell the rally mode, which is what happened when the market rallied today. The trend momentum reading is so powerful and so functional that you can't ignore them, because that's where your big moves in markets come. It's in the direction of the trend momentum reading, not necessarily in the direction of the trend itself. So this is what we're looking for. All right. So we're selling rallies, but we'll be prepared to start getting long again in silver once this comes off. So for right now, it's a bearish attitude in your silver, which explains the crash into the close today after it rallied. Looking at nat gas, it's a similar story, except for this one's locked in. The bear market is locked in, and you got a crash alert for tonight into tomorrow's trading. So we're expecting that one to go much lower. Looking at the Dow. Now, the Dow is in a bull market, but it still has a bearish trend momentum reading. And look what we got here. We got a crash alert for tonight. Very interesting. Again, the trend momentum reading is saying crash. The long-term trend, though, is bullish, but you don't see nothing bullish on the chart. It's just been a very long sideways market. All right, very choppy environment. And now we got a crash alert. So we'll see what happens here. Just very choppy right now. Very choppy. Next up is the NASDAQ 100. Now, it's crossed from a bearish market to a bull market, and it has a bullish trend momentum reading, but we just got a neutralize today. You got a neutralized market today. Not a lot you can do about that. Not a lot you can do about that. And will the bull market get some maturity? Will this market try to run? It's brand new bull. We just crossed over into that path. So this market could rally from here, but then again, too, it could also roll over. So this is very interesting times for the stock indices. Now, here's gold. Gold's in a bull market, but it has a bearish trend momentum reading, which means you're still in the rally mode, even in gold. And gold also sold off into the close today. So again, I think it's getting ready. The price action is being squeezed, and I think it's going to come down. It has to come down and test this 1900 in order to validate this bull market. I don't think the bull market's going to relock in and start trending higher until this 1900 is successfully tested. The 1900 has not been successfully tested, and it's going to need that before it can move forward. And that's why you're seeing the bearish trend momentum reading, sell the rally mode. Looking at the S&P 500, now the S&P 500 has never come off. It's been in a bear market, and all you've seen is a bear market rally off the 52-week lows. And then it's just been going sideways in a wide range, but it has a bullish trend momentum reading, which is weird, right? You got a bullish trend momentum reading, but you got a bear market, and it hasn't done enough to change trend. But this trend momentum reading makes it so that you don't have a choice but to look for long entries. It's a weird market right now, but now it's neutralized today as well. What do? At any moment, the bear market could come in and reclaim the price action in the S&P 500. That's the dangerous part I was talking to you guys about today in the podcast. This is the danger zone in these markets, and you can't ignore it. So even if the market, tries to come up here and take out 4,200, if this doesn't switch from a bear market to a bull market, it's still going to be looked at as a bear market rally. And at some point, the bears are going to reclaim this market, and this green line is going to turn red. That's the danger zone I was talking to you guys about. This is what I wanted to show you and point out today. Now you see it with your own eyes. The trend momentum reading is still a bullish one. So you're buying pullbacks. Every time the market pulls back, boom, rally. Pull back here, boom, rally. All right. So, but it doesn't hold the rallies. Every rally is sold, which is awkward in a bullish trend momentum reading environment. Normally the market goes like this, like it did back here, and then it just stays up. But this one comes up and then it falls, and then it comes and then it falls. It's just in a sideways thing right now. So a very long sideways channel that has been like this since last year. And that's a dangerous thing. This market is being propped up. This is the Fed's work right here. All right. Pumping liquidity, printing money, propping up markets. You need to understand this. All right. Next up, we got the crude oil market. You're in a bear market, and it's been all over the place, but going from bearish to bullish to bearish to bullish. Something I want to show you though. Each bullish situation gets less and less. Like back here, it went up, then came down, then went up, then came down, and then got bullish here and came up and gapped. And now you're finally filling the gap, and you're red though. You're in a bearish trend momentum reading. And now you're neutralized 3 days in. So this one is looking very bearish. Regardless of what they're saying the fundamentals are and what the news is, and OPEC this and OPEC that, this is a bear market. The long-term trend is bearish, and you got a bearish trend momentum reading yet again. Every time this thing tries to do a rally, it gets sold off bad. Why? Because you're in a bear market environment, and it can't do anything but fall. So I don't expect anything from this market right now. Not yet, anyway. Next up is the Russell. Now, the Russell's in a bear market. It had a green bullish momentum reading, right? And then we got this neutralized reading, right? It's looking back, showing it was neutralized. Got a rally to the bottom of the Kumo cloud and then pulled back from that. And we have a bullish trend momentum reading as the neutralized has fallen off now. So the market is still in a bear market, but you got a bullish trend momentum reading. So the market is trying, it hasn't started to yet. It's trying to do a bear market rally, but just can't get it together. And 1800 is a true resistance point for the Russell. I think the bear market is about to reclaim the Russell and take the Russell much, much lower. Just by looking at the algo chart, that is exactly what we're seeing right now. It's looking scary for the Russell right now. Looking at the US dollar index, the US dollar index is still now, it's crossed over from bullish to a bear market, but with a bullish trend momentum reading because it's stuck in this range. 103 is your resistance, 101 is your support, and price action is staying within that realm and not trying to leave it. So until it leaves this consolidation pattern of 101 to 103, I'm not expecting anything of this market. But keep in mind, though, because you've crossed over from bull market to bear market, at any moment, things can go left. The bear can reclaim this and the price action can collapse. But as long as this line stays green, as long as this bullish trend momentum reading is still here, the market still can try to stage a bear market rally. But the bottom of the Kumo cloud at 103 is strong resistance, and 101 is strong support. So whatever one gives out first, I think that's where the market's going to run for an extended period of time. And you can make an argument for both scenarios. You can make an argument that the market will break the 103 resistance and just take off like a rocket. You can make an argument that it will not get anywhere near there and that the 101 is about to get broken and the dollar is about to fall down below par. There are many arguments for both cases. We can only take but what we see. And right now, this is the concerning part. If you're bearish the dollar, this is concerning because you got a positive bot check a few days ago, and that means a breakout rally is imminent. How strong the upside will be, we don't know, but we know there will be one because of this bot check. And every time you see a bot check, something happens. Sometimes it happens right away. Other times it waits a little bit. The last one we had was right here, and the market did fall immediately after. Last one was back here, and the market fell immediately after. Right here, and the market fell. Right here, the market fell. So you can't ignore the bot checks. And this is a green one, so we're expecting the market to pop out, to break out to the upside. Will it be sustained? I have no idea, but I know that it's coming. All right, so there you have it with the dollars. Not doing anything, not going anywhere, and I don't expect it to. Ethereum, bear market, right? Had a bearish trend momentum reading, which explained all this downside production from our crash alerts. But now the market's neutralized yet again, and I'm not expecting this one to do anything until it comes off neutralization. Support is at 1700, top of the Kumo cloud. If that doesn't hold, the next stop is 1600, bottom of the Kumo cloud. If that doesn't hold, then 1400 to 1350 is your next downside target. And if that doesn't hold, then your next support is at 1200. And if that doesn't hold, you're not going to find any more support until you get below 900. I know it is what it is. It is what it is. All right. And that's it, folks. So, yeah, it's FOMC week. Today was just Monday. What does the market have in store for us? We're going to find out. But we trade what we see, not what we think. And like I said, in choppy market conditions, you can get chopped up pretty bad. But here's the thing. If you're patient and you stick with it, once the market breaks, it breaks and it breaks hard. And not only do you gain back whatever you lost, but you make obscene amounts of profits that go with it because the trend will be unrelenting. You can make an argument that the breakouts will be to the downside, but there's also arguments to say it can be topside. Never underestimate the desperate situation of the Federal Reserve to pump liquidity into the system. They can do it. They can make the markets rally. They can give the Dow another 1,000 points, the S&P 100 points, the Nasdaq another couple of 100 points. Yeah, they can do that. But it doesn't mean it's sustainable. And what I'm saying to you is it's not sustainable. And at some point, the market will fall and fall hard. They can't keep this up forever. There's too many things going on in the economy right now that is standing in their way, and they can't do anything anyway. They can only jawbone, do lip service. There's nothing they can do. They've created a terrible situation, and they've kicked the can down the road far enough. There's no more road left. They've been doing this for over 20 years, folks. Fed money printing and stimulus for over 20 years. And now the chickens have come home to roost. Get ready to make obscene amounts of profits in these markets, folks. The chop is about to be over. Once the announcement comes on Wednesday, the markets will let loose. And you better believe it's going to be a powerful time. Will the Fed win and cause the markets to rally and explode higher? Or will people say, okay, the gig is up, and they sell off everything? That's what we're going to see. All right, folks, I'm out of here. Smash the like button. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.